Hello and good morning, everyone. My name is Jillian Bender-Cormier. I'm brand manager with Bender Insurance Solutions. We want to welcome you to another educational Bender U webinar, Don't Get Burned, Lessons from Recent California Wildfires. Some housekeeping notes. At the end of this webinar, we will have an engaging Q&A session that I will be facilitating. If you have any questions during the webinar, please feel free to type them into the chat box or in the Q&A section. We'd like this to be an interactive experience, so our presenter will be available to answer your questions in real time throughout the webinar. During our additional Q&A time at the end of the presentation, I'll be sharing other questions you might have with our speaker. We want to be conscious of time, so if we don't get to answer all of your questions, we will gladly reach out to you individually after the webinar. You're all in listen-only mode and will remain muted throughout the webinar. This session is being recorded, and at the conclusion of the webinar, the recording link will be forwarded to you. We have a fantastic expert sharing with us this morning, but I'll let Bender's own Director of Personal Lines, Stephen Magus, do the honor of introducing him. Welcome, Stephen.
Great, thanks, Jillian. Today we have Steve Severe. He is a licensed senior professional public adjuster with over 30 years of experience. Steve brings expertise, professionalism, and compassion to his work. Advocating exclusively for policyholders, his mission is to assist disaster victims with major property losses as they rebuild their lives. Steve's deep knowledge of the insurance industry is indispensable to disaster victims, freeing them to focus on recovery without the burden of assembling and documenting an insurance claim. Steve joined Greenspan Co Adjusters International, where he is now principal, in 1992. As a representative of both residential and commercial clients, Steve works zealously to advocate for individuals, communities, and businesses that have suffered major losses. His work has earned him a reputation as a respected industry expert in handling a broad range of residential and commercial property loss claims ranging from fires, floods, earthquakes, vandalism, tsunami, and other catastrophic events. As a client-exclusive advocate in the claims adjustment process, Steve represents the policyholder and not the insurance company. His team, which includes structural engineering experts, inventory specialists, forensic accountants, insurance attorneys, and former insurance claims representatives, works tirelessly to secure the most favorable outcome from every insurance property claim. With public adjusting licenses in over 19 states, Steve has represented victims of major losses throughout the United States and worldwide, including, but not limited to, Thailand, the Caribbean, Puerto Rico, Florida, Texas, Alaska, and Hawaii. With that, I'd like to present you Steve Severe.
Well, thank you. Thank you, Stephen, and thanks to Bender University for the opportunity to share some stories and suggestions when it comes to preparing for and responding to a major disaster. As Stephen so eloquently put, I don't need to spend a lot of more time on this, but I've been doing this for about 32 years. I started very young, starting with writing up inventories on houses that burned down, all the way up to being one of the leaders of the company here. And I have worked, as Stephen points out, many places around the world, but my home is in San Francisco. The majority of my efforts remain on the West Coast, and I've been at every firestorm that you have heard about in the last 20 years. I have been there all the way back to the Laguna Beach wildfires, the Malibu wildfires, on and on and on, to the most recent fires that we had this past year. And speaking of that, we go to the next slide. This is a slide of the drought and the fire seasons that are happening, and as you can see, why this is so important right now is that the red area, the larger the red area, the more potential for problems exists. And as you can see, in the last 5 years, we've had 4 major wildfires, so it's really unprecedented. It's really becoming the new norm, if you will, to have a wildfire season, which it makes for a lot of this very difficult to deal with, and we can talk about why that is. It has to do with a lot of things. It has to do with climate change, obviously, which everybody's talking about. It has to do with drought, as you can see from this slide. It has to do with overgrown forests and what we do about overgrown forests or don't do. It has to do with utility management. PG&E is now working really hard to not get sued again and to make sure that they're shutting power lines off at critical times when it's windy and hot, along with other measures that they're taking to ensure that those kinds of problems don't happen as a result of their power lines. That combined with high winds has been a major problem that's all contributed to these wildfires that we've had. So we move on to the next slide. What we're going to talk about really is what not to do should you be in the middle of one of these disasters, along with critical action you can take now to prepare. And then we're also going to talk about changes in California legislation and availability of insurance coverage. So there's a few things I want to share today, what I've seen over the years of being in wildfires. And we're talking about wildfires. We do all kinds of claims, both commercial, residential, water damages, regular fire to a building, thefts, a lot of different things, but we're really focused today on wildfires. So these stories really relate well to wildfire victims. So you'll see on this slide, it's small apartment long recovery. So what a lot of people do after they get burned out of their home in a wildfire is they run out and rent something. So they've got a 5-bedroom house, they've got kids, they've got dogs, they've got all this stuff, and they want some sense of normalcy. They've got to get their family somewhere. So they run out and they lease a 2-bedroom apartment or a 3-bedroom apartment or a small home. And maybe it's not in a perfect location for their family. It's small, but they feel the need to get in and get somewhere quickly. And later, a lot of these same people, 2 months or 3 months after being packed into a smaller space than they're normally accustomed to, they start to get that cabin fever and really wish that they had thought that through a little bit better. And the insurance policies entitle you or entitle them to like, kind, and quality of what they had when they were burned out of their home. So when you go out and rent a 2 or 3-bedroom apartment where you had a 5-bedroom house, you're only saving the insurance company money. You're taking a less than your lifestyle, and the only people who are getting the benefit is the insurance carrier for a lower rent payment. So what I advise people to do is slow it down a little bit. This is not a sprint, but it's a marathon. So take some time, get a few hotel rooms, stay with family or friends, but really think about the fact that this temporary situation is going to be a year, 2 years, maybe 3 years of your lives. And it's much better to spend a little time on the front end to find the right place for the next couple of years, as opposed to getting in some place that it doesn't fit your needs. And then as you go down the road, then you try to either live with it or try to undo it. Now the insurance company's fallen in love with what your rental payment is. And you've got to undo this stuff. And it's just a lot more energy, or it's a lot more discomfort than it necessarily needs to be. So remember, it's a marathon, not a sprint. Slow down a little bit. A couple of extra weeks in temporary housing while you find the right long-term temporary housing will be really impactful for your mental health and for your family's well-being. So my first cautionary tale is recognize that this is not going to go fast. The adjustment process isn't going to go fast. The rebuilding process isn't going to go fast. And even if you're a taskmaster, you just have to appreciate that this is going to take time. So be prepared for that and don't race into decisions. And that goes for hiring contractors as well. You don't want to race out and hire a contractor right after a fire. You want to really do your due diligence and understand that this is going to be a chunk of your lives. And from that, we can move on to the next thing. Another thing that people a lot of times make the mistake is they talk to the insurance company when they're there trying to deal with the insurance company and deal with building a new home, and especially in a wildfire where most of the homes are a total loss. So it's really, you can design your next home. You don't have to build the same thing that you had before. You can build anything that you want. And this is where people really have a difficult problem, because when they're talking to the insurance company, they're talking about the home that they want to build, which is essentially now going to be their dream home, because they're starting with a fresh, clean slate of what they want to build. And so when they're putting the bids together and they're preparing everything and they're sharing with the insurance company all the things that they want to build, But that's not how you're insured. How you're insured is for what you had, not what you want. And this becomes a major struggle. And in fairness to the insurance industry, it's not their fault when these clashes happen, because their policy says they pay for something one way and people are asking for something another way, and you're naturally going to have a clash there. So my advice to everybody, not just in a wildfire, but after any fire, is recognize that you have two things going on here at the same time. And they're really two different worlds. You have what you had and you have what you want. And although they run on certain parallel tracks, they sort of naturally compete with each other, because on the one hand, you want to identify all the quality and all the items that you had and put them down on paper so that you can theoretically recreate what it would have taken to build that house back exactly as it was one day before that wildfire came through and took over the house and other homes. On the other side, you want to get the most for your money, and you want to build the home that you really want, your dream home. So on one side, you want to get as much as you can for what you had. On the other side, you want to get as much possible that you can in your new home and do all your upgrades and do all those other things. So if you can just kind of keep in mind that you need to separate these parallel tracks, keep the insurance company focused on what their insurance contract says. Pay attention to all the unique details that you had in your home that maybe you would discount now, that you wouldn't care about or want, but they all have value. A really easy example of that is lath and plaster. If you have a home that was built in the 50s or the 40s, you probably had lath and plaster, which is far more expensive than drywall. In your new home that you want, you will most likely go back with drywall. So if you go through your bid with the insurance company with what you want, it's going to have drywall prices, whereas you are entitled to plaster prices. So they're naturally going to get the benefit of that. On the flip side, if you had ceramic countertops in the home that you lost, and you're now going in with granite countertops in your kitchen of your new home, the insurance company is going to want to deduct the difference from the granite countertops to the ceramic tile, because the ceramic tile is cheaper. So now they're getting the benefit of the changes you make that are called quote unquote upgrades, which is an argument that is a longer session, but they're also getting the benefit of the changes you make that cost less money. So this is why you really want to separate the claims process from the real world of building. So that's something I see often, all the time actually, and it makes it very difficult for people to settle their claims. It gives the insurance company the right to sort of peek over the wall of that second recovery track and then point out what you could have done different or how it could have been cheaper, when really what you want to do is you want to lock in a number with them on that first world, that first track recovery. Lock in the number, get everything agreed, and as long as you demonstrate that you're spending the money in aggregate, you will have qualified to get your replacement cost benefits under the terms of your insurance company. So you don't really want to start your building project, commit to a contractor until you know how much money you have to work with. And then with that ball of money, you can make the best decisions, like swapping plaster for drywall, etc. So I think I've got one more story here. So the other part of this process, kind of going back to the marathon, not the sprint sort of suggestion, another thing, and this really relies a lot about inventory. So when your home is completely burned down, the insurance company gives you some advance money, which we'll talk a little bit more in the latest regulations and things insurance companies are doing today to respond to wildfires differently than they have in the past. We'll get into that. But even if they give you a chunk of money up front, which they will, a lot of times when people start to put their inventory and write down everything in their home, it becomes a real burdensome task. And even people who start out strong and start writing and really paying attention, at some point they kind of run out of gas. They're thinking about a building project, they're dealing with their family, they're trying to get their lives back together. There's some mental health aspects to it. And the easiest thing to do is to put off doing the inventory. And it's your responsibility as a policyholder to prepare your inventory. The insurance company has no responsibility to make sure that you put your inventory together properly and that you submit it to them. Their responsibility is to take the information you give them, go through it, ask questions about it, poke holes in it maybe, and then come up with what they believe they should pay you. But if you don't do the work to prepare the inventory, and a lot of people don't, then all you're going to get is some small percentage of the total available coverage, and ultimately you lose out on what becomes millions and millions of dollars every year for the insurance industry. So if you don't do it, it's your fault. It's not the insurance company's fault. And what happens is, you know, a couple of weeks goes by, a couple of months goes by, now you're 6 months or 8 months or a year into this process, and you want to work on your inventory, and it's making you a little guilty in the back of your mind because you know you should be working on it, but there's always something more important that comes up. Oh, we gotta go to Johnny's soccer game, we'll do the inventory tomorrow, etc. And then a lot of times people just eventually just go, you know, we got a lot of the money already, and you know, we don't think we have that much more stuff, and now they're rationalizing why it doesn't make sense to put the time and energy into the inventory. And when I talk about doing inventory, I'm not just talking about listing out the couch and the bed and the TV. I'm talking about, done right, listing out every single thing down to pencils and paper clips, postage stamps and Tupperware. So it is a laborious process. But if you don't do it, then you're leaving lots and lots of money just on the table. And the only people, again, who win on that are the insurance carriers. Next slide, please. So critical action you can take now. Hopefully you'll never have to face an event, but you should be prepared for it. We're going to talk about reviewing your coverage, hardening your home, creating a video, creating an action plan, and how to safeguard your documents. So reviewing your insurance coverage, you should be doing this at least once a year. You know, lumber prices are currently up 380%. Labor is hard to find, as you all know from the news. You can't always even get the full Starbucks menu because everybody's trying to hire and there's just not a lot of labor. And so the labor that's here is a lot more expensive. So your material price is up, your labor price is up, and insurance coverage, especially if you've been in your home a while, it doesn't keep up with inflation oftentimes. And even insurance policies have an inflation guard protection feature, which means that the insurance coverage goes up a little bit each year on its anniversary date. That oftentimes, that small amount is nowhere near enough to keep up with the inflation. And it doesn't matter what you paid for your home, and it doesn't matter what you could sell your home for. That's not the basis of this valuation. And a lot of people make a mistake on that. You get a great deal on a house, but that doesn't mean you could rebuild that house for that amount that you paid, even with the land. So don't base your insurance based on the value of your home. Base your insurance on what it would take in today's world to bring out a fully licensed general contractor to build that home from the ground up. And oftentimes there are agents, not Bender, of course, because they're fantastic, but a lot of insurance agents, when they get asked by policyholders, and I've heard this over and over again, when the policyholder goes to the insurance agent and they say, hey, I want to make sure that I'm covered properly, which is exactly what they should do, by the way. And the agent will say, well, don't worry about it because you have extended replacement cost. So even if it costs more than what your policy says, we've got you covered. And this happens a lot with the direct writers, especially. The problem with that is that you're already starting, often you're already starting with too low a number, and relying on that extended replacement cost. Let me explain what that is. Extended replacement cost is a percentage of money above your policy limit for your house. It's sometimes 20%, sometimes it's 25%, sometimes 50%, occasionally 100%, but it's some percentage above. So if you had $100,000 coverage on your house and you had a 50% extension, it means that if $100,000 isn't enough to rebuild your home, you could potentially have coverage for an additional $50,000 or now $150,000. So it's a great feature and it's something everybody should have in their policies, but it shouldn't be relied on as to how much coverage you bought. And sometimes agents do that because they're trying to keep the premium down, and they know that if the premium will go up a little bit, and they're trying to be competitive with the guy next door. And that's just a mistake, and it's not professional when you're trying to put coverage together. If there's a limited ability to get coverage, that's a different story. But when we're talking about available coverages there, then don't rely on extended replacement costs. And if your agent is relying on extended replacement costs, you should have a serious discussion about that. So the extended replacement cost should be like wild emergency situation. Now lumber's up 1,000% instead of 380. you still have enough money. You don't want to be caught in a situation where a lot of people, by the way, and these last wildfires were caught in this exact situation where all the labor and the construction costs were shooting up and they simply didn't have enough. And now what those people have to do is they have to take money from their contents money or not rebuild. They've got to make some tough decisions that can really alter the course of the rest of their lives and their children's lives. So this is really important stuff. So make sure that you're reviewing coverage often, make sure that you're keeping up with what's going on, make sure that you're buying coverage based on what it would take to rebuild the house, not based on what you paid for it or what your mortgage is or any of those other factors that sometimes people mistakenly do. So those are some things right now. We can move to the next slide.
Steve, I actually have a question for you.
Sure.
This is from Scott. He asks, is a video on your phone acceptable to inventory your assets, or should it be a written list?
Well, it's a great question. We're going to talk about videoing the contents of your home in a minute. I'll tell you that a video is great. It's super important to have. It is not enough to turn into the insurance company and get paid money for. So it's a double answer. So yeah, video is fantastic. It's a great place to start. It's a great way to show the insurance company the quality of things you have, the amount of things you have. You still need to translate that video onto forms, and you have to price it. There's depreciation that has to be put on it. So yes, video's great. Video's a great start. It's going to put you far in front of the pack as far as being able to properly detail what you had in your home and prove it to the insurer. It is not enough to take that video, say, okay, Mr. Insurance Company, home burned down. Here's my video. Now please pay me my contents money. I think that answers the question.
Yes, thank you.
Sure. So, and we'll talk a little bit more about that in just a minute too. So critical actions you can take now. Hopefully you can be in a situation where you never have a wildfire coming through your property, but if you do, these are things you can think about and do now to better prepare and protect yourself. First of all, and some of these are pretty obvious, maintain defensible space. When there is brush and debris or things leaning against the house, building materials leaning against the house, all these kinds of things, that it just means the fire might find you faster and it might consume you in a more major way. I can tell you, going to wildfires, there are areas where the whole neighborhood's gone and it didn't matter what you did, you couldn't have done anything to stop it. But there are other areas where I have witnessed where there's a house standing and houses around it are gone and that house is still standing. Fire finds its way, and what you want to do is you don't want the fire to have you as your best appetite, right? So do what you can. Maintain defensible space around the home. Don't have things laying against the house. Remove the debris from the roof and the rain gutters. Clean out your rain gutters. Get all that dried tinder. Get it out of there. If you are ready for a re-roof, or if it's something that you're capable of doing, think about re-roofing with ignition-resistant materials. Especially if you're one of the people that still have a wood shake roof. Those are, as I think everybody knows, those get consumed very quickly. So think about, if you're at a point of re-roofing, what materials are the most ignition resistant that I could adapt to. And another thing, if you have a swimming pool, a lot of people have swimming pools here in Northern California and Southern California too, but they don't have a pump. You can get an emergency pump that can pump water out of your pool, and you can use that water to spray on your house in a much more significant way, by the way, than just a simple water hose. And sometimes the water runs out. You should have multiple hoses too, but sometimes the water will run out as the firefighters are fighting the fire. You may not be able to get water in your hose. Doesn't mean you shouldn't have multiple hoses, but if you have a good pump that you can spray a lot of water over the roof of your home and sort of wetten it and get it to a point where a fire comes through, it's less ignitable. Or if some hot spots come on your land, you're prepared to put the hot spots out before they can go from hot spots to big fire. Because recognize, if you're in the way of a wildfire, you might not see any firemen. You might not see anybody out there. You might, and hopefully you do, but oftentimes they're stretched so thin that you may not have help. And if you're there, first of all, you should get out of there and recognize that these are things that can be replaced, but your lives can't be. But some people want to stay no matter what happens. And if you're going to do that, at least be prepared. If you have a pool, get a pump for the pool so you can pump a lot of water on hot spots, or soak down the roof before you evacuate. You know, take a little bit of time, wet everything down. If there's dry brush, wet it, get everything wet with your garden hoses and with your pump from your pool, and then evacuate. Try to get out there as safely as you can and as efficiently as you can. I recommend that you don't try to stand up against the fire and have a battle with the fire, because the fire's 2,000 degrees and it's got a mind of its own, and it will win, and that is not a space you want to be in. But those are things you can do before you evacuate, so that you're better prepared, and hopefully when you come back, your home is one of the homes that was saved. We can move on to the next slide.
I have another question for you, Steve.
Mhm.
This is from Jay. Doesn't most insurance have coverage for a mitigation company to create the loss list for the homeowner so they can focus on daily life?
Good question. There are some insurance companies that employ companies to help put inventories together. What we have found, we've worked with a lot of them and know them. What we have found is that there's no real motivation to get all the details, to get it right, and to price it also. So that's some assistance that they may give. Generally speaking, the product that comes out of that doesn't get you to all the number that you could get to if you do a more detailed examination of your inventory. Remember, the insurance company doesn't have any fiduciary responsibility to bring experts out there and get this right. It's your duty as the owner of the house, as the policyholder, to prepare these things. So they may give you some assistance, but the companies that are doing it, they're paid by the hour, and they go out there and they're overwhelmed with a lot of these things. And it is helpful. It's often not enough to really do a proper job of documenting your true loss and damage to your contents. But yes, there is some of that does happen. I thought the question might be, which is another good question, do insurance companies pay to go out when the fire department is so stretched thin? Do they pay to go out and protect your house so that it doesn't burn? And there are some more premier insurance companies that have that service where they actually hire private firefighters to go out to their addresses within the fire zone and actually protect and defend that policyholder's house. And funny, not funny, but funny, kind of strange story. We had a client who didn't have that service, and next door had that service, and they were there as the fire was approaching. And that private firefighter, they said, please help us. Our house is starting to burn. Could you please help us? And they looked on the list, and their address wasn't on the list. They said, sorry, we can't help you. So if you have a premier property, if you have some of the higher level insurance carriers, that also might be an option to be able to have that sort of defense service. So I kind of thought that might have been where the question was, but that made me think of that. So anyway, so back to critical action you can take now. As was just mentioned, video the contents of your home. It doesn't take a lot of time. Take your phone or a video camera if you still have a video camera, and go through your home, go in your closet, scan everything, open the drawers. Just do a quick video inside the drawers, inside the dressers, your jewelry, your garage, your tools. Just walk through the entire home, do a quick video. It also helps if you're narrating the video and talking about, yeah, I just got this last year, this is my blah, 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 this is my fancy this and my fancy that. And go through the kitchen, open the drawers, scan all the doors and cabinets, and just do a pretty thorough walkthrough. It won't take more than 10 or 15 minutes, maybe less, because you don't have to focus down on everything. Just get a nice scan of everything. And what's really important next is that either goes to the cloud or it goes to a hard drive that is saved somewhere other than your home. Because you could do all this work and video everything and then run out of the house, and your phone you don't leave with your phone. And if it's not saved to the cloud, all that work you did, all that smart planning you did is now burned in the fire, and you don't have the evidence that you're prepared to have. So really important is that you make sure that stuff's all in the cloud, or it's to a hard drive not kept in your home but kept somewhere else. That goes for documents and photos as well. In this slide, you'll see on the right side there is a safe. This is a picture of a fireproof safe after a wildfire. And so if you think having all your birth certificates, all your important documents, treasured photos, deeds for houses, all that stuff, all the stuff that you find important, your trust documents, whatever, if you think having them saved in a fireproof safe is secure enough to save you, I want you to look at that picture of that fireproof safe. I can't tell you how many homes I've been to in wildfires where the safes look like that. Even sometimes like the real heavy duty gun safes don't fare well. Maybe the guns are still wasted inside. Maybe there's something left of them, so they're not quite like this ball of gray paper. But even those safes, when you get into a 2,000 degree heat wildfire, these safes really aren't built for that kind of heavy duty action. Even if the sticker says they are, I can tell you from experience that you're much better off scanning everything that's important, including documents, photos, and then again, saving them to the cloud, saving them to an external hard drive that's kept off property. And then the next thing I'll tell you is, be ready to go. Be ready to go in a moment's notice. If you're in a fire zone, subscribe to local emergency notifications so you're getting a text message on your phone that something's happening, so you can get up, get your family together, have your family all have a backpack packed with essential stuff, and just have it there. And that way, if you're running from a wildfire, you're not panicking trying to find what you need, but you have it, you know exactly where it is, all your family members have it, they know exactly where it is, and you're ready to go. You grab your backpack and you get out of there and evacuate as quickly as you can, keeping in mind that your lives and your family's lives and your pets' lives are way more important than this stuff, but being prepared when you go certainly helps. And so now we'll go on to the next slide. So we talked about having an action plan ready, including key contacts to ease the process in the event of disaster, have your go bag ready, have your videos done, have them saved to the cloud or somewhere else, and that way you're prepared. If you're not in a wildfire zone, this isn't as important. Some of these other things are still really important. The video is important. Maybe you don't need a go bag because your odds of having to run from a wildfire are obviously reduced to almost zero. But if you're in the path, if you're possibly in the path, all these things are really going to be helpful to you that hopefully you'll never need. You move on to the next slide, Rebecca. So now we're going to talk just a little bit about recent changes in wildfire regulations. So with all these wildfires, there's been new regulations that have changed. Normally it's been 24 months for loss of use or additional living expenses under the terms of the insurance policy. It used to be 12 months. It got raised to 24 months. And then what we have found through these wildfires, that 24 months oftentimes is still not enough, because when you have a huge disaster, the insurance companies are running thin of people to help adjust these claims, so they take longer. Then you've got contractors who are overwhelmed, can't start construction for a long time. You have permitting processes that sometimes are laborious, sometimes are streamlined. 24 months just might not be enough for you to go through this whole process and be back in your home. So they've put some extensions in, and you now have up to 36 months. It's 24 months with 2 6-month extensions. As long as you can show that this is reasonable, you now can move up that to 36 months. But a word of caution about that. It's a time extension, not a dollar extension. So this is something for you to look at your policy and talk to your agent. Some policies are written that the loss of use and additional living expense are synonymous. They're interchangeable things. Basically, it's the cost for you to live somewhere else while you can't be in your home until your home is rebuilt, or until you replace your home somewhere else. So that's what the terminology is. So you continue to make your mortgage payment if you have one, but the insurance company is paying you rent, they're paying for rental furniture, they're paying for other things, extra mileage, they're paying for the additional living expenses on top of what you normally would have spent had this fire not hit your home. So that's what it is. And if you have what's called actual loss sustained on your additional living expense, then your 24-month limit can go to 36 months. we've had some clients in the last couple of fires where their additional living expense limit was not just time limit, but it was also a dollar limit. So they had X amount of dollars to spend. And if that ran out in 22 months or 18 months or 24 months at the maximum, then they were done. So we had some clients, a very nice home, and although this extension happened to go to 36 months, they ran out of coverage at like month 21 because they were held to a dollar limit. And this legislation didn't say, hey, it doesn't matter if you have a dollar limit, you got to pay for 36 months. Would have been better if it said that for consumers, maybe not for insurance carriers, but for consumers, that would have been a better way to put this law into motion. So they got it half right. They said, hey, this just simply isn't enough time for people in a wildfire. We're going to give them some ability to extend to 36 months. But there's a section of people who aren't insured with this actual loss sustained number, and they didn't contemplate that when they made the law. So look at your policy and find out if it says actual loss sustained for your loss of use or your additional living expense, or if there's a dollar amount. And then have that discussion with your agent as to whether that's appropriate or whether you need to talk about that. The next thing is they've introduced some language in a wildfire where you don't need to do a full, complete inventory because the Department of Insurance found that that was a burdensome task for wildfire victims. That's so much going on. They've lost their community. Everything's gone. It's not like a regular fire in a kitchen where you can still sort of see things and write them down. So they put together this legislation that you don't have to write every single thing down, that you can group it together. You can group together, say kitchen equipment. You can group together tools. You can group together various things that are similar, and you can bulk them together and put a value on those things. And although, yeah, that streamlines it, it's helpful, it's not the best way to make sure that you get everything you're entitled to under the terms of your insurance policy. The dollars are in the details, is what we have found. And if there was a faster, easier way to do this, believe me, we'd be doing it, because doing the inventories, we have a whole department. We've got a department of field people that help reproduce these things, that drag it out of people's memory. We have a whole department of people who do depreciation and pricing, and it takes us an enormous amount of energy. And for a policyholder to do it without all the tools that we have and the knowledge and the experience, it's an insurmountable task oftentimes. However, when you group things into larger groups, it's less defendable. So if you take tools and you take $5,000, the insurance company looks at it and says, well, $5,000 seems like a lot. I'm just using this as an example. $5,000 seems like a lot of tools. I think maybe you might have $3,000 worth of tools. And so you get into this back and forth. But when you can take it down to each tool at each price, it becomes more defendable, and the insurance company understands it better. So although those same tools might end up being $10,000 instead of $5,000, it's easier for the insurance company or their adjuster, their representative, to be able to look at it and go, oh yeah, I see the crescent wrench. Yeah, I know that's what a crescent wrench costs. And now you just extrapolate that over a lot of things. And what you end up with is more value. Even a junk drawer can add up to be a lot more money. Sorry, this Zoom is happening from my home, and that's my dog. So even a junk drawer that looks like junk, but when you have super glue and scissors and all these things, you start adding all those things in a junk drawer, it adds up to a lot of money. And everything that was in your home costs money to repurchase again. So these are real things that you're going to have to go out. You're going to end up with a new junk drawer. And so to put down bulked items together that give you lower numbers, you're really not doing yourself a service. So yes, the legislation's there. You can take advantage of it. But oftentimes, and sometimes if you're way, way underinsured, then grouping it together will get the job done. But not in every case. So you should be careful just not to rely on that new legislation. And another thing that insurance companies have been doing in the last couple of disasters is they've been advancing more money than they usually do against the contents coverage. Some of them were advancing 25% of your coverage, some were advancing 50%, and in some cases 75% of your available contents coverage. And that's fantastic, and it's great. It's a great move for the insurance company, but it's not altruistic either. because they know that if they give you a substantial amount of money, 25, 50%, or especially 75%, the odds of you going through the effort and the work to try to recreate an entire inventory go significantly down. So if they've paid 25% and somebody never goes through the extra work, they potentially save 75% of their coverage, or 50%, or 25% of their coverage. And people also have a tendency to undervalue their own stuff. And I can tell you from experience doing this 32 years, I've had so many people where I've sat down with them and they've had $500,000 worth of coverage for their constants. They said, well, we just don't have that much stuff. I said, well, how long you lived in your house? Well, 22 years. You raised a family in the house? Well, yeah. So how big was your house? Start asking a few questions and I'll tell them, yeah, you might be surprised by the time we get done with this, how much stuff you really had, because people collect things and people have a tendency to undervalue their things. And so sometimes in people's minds, they'll sort of say, well, they gave us a lot of the money and, we didn't really have that much stuff, and that's probably about right. And that's one of the reasons why the insurance companies will do this, because they're making it easier for you, but they're also making it to where you might not be collecting everything you could if you really put your thinking cap on and really got down to business and treated this like the business transaction that it really is. And the other thing that's a really great thing, probably the most significant change in the legislation that is hugely valuable to people after wildfire, is they've enacted legislation that if you choose to go and buy another home instead of rebuilding your home, which a lot of people choose to do, it's faster and they don't want to go through the process or for a variety of reasons, they can no longer deduct the value as of January 2021. They can no longer deduct the value of the new land from the purchase price. So before how it always worked was, you have an insurance claim, say you've got $500,000 agreed to replace the home, and you don't want to go and spend the time and the energy to rebuild the home, and you find a home that you like, it's somewhere else. It can be anywhere else. It doesn't have to be in the same community. You find another home that you want to purchase, and you pay $600,000 for the home, and $100,000 of it is deducted for the land because you still own the land where the fire was. So they deduct the land from the new place. So it's a valuation of what it would cost to rebuild your home. You're replacing it instead of rebuilding it. The land is taken out of the equation on both sides of the equation, which is it's fair to the insurance company to do it that way. And in that first scenario, if you paid $600,000, the land was worth $100,000, then you've qualified to get all of your replacement cost dollars at $500,000 as it was agreed to, and they owe you the replacement cost holdback money so that you get your full entitlement. Here's the problem that has happened for wildfire victims, is that the cost of buying homes goes up around the area because people are trying to get into homes. So now they end up spending more, and the land where their home was for at least a little while goes down in value because nobody wants to buy a lot in the middle of a fire ravaged area. They usually come back up in value, but it take a few years. So they were at a problem where they'd go and they'd buy a home for the $500,000, which qualified for the replacement, but the insurance company go, wait a minute. We believe the land, that home, was worth $100,000, or they paid the $600,000, the same example, but they come back and say, we believe the land was worth $200,000. And so now you've got a negotiation as to, well, what is my replacement cost and how much do I have to take off that number for the land? So sometimes, a lot of times, people wouldn't qualify for the full replacement cost because they had to buy the land when they bought the house. They didn't have a choice. And there's an escalation of price of the new house and a decline in value in the lot that they had. So they were unable to properly make that transition without coming out of pocket. And in some cases, people don't have the money to come out of pocket and wait for that land where their property was to come up in value to then pay themselves back. So this legislation that was enacted, it's only good for wildfires. It doesn't work if your singular house burns down and you want to do it, the land still comes out. But in the case of a wildfire, this is a huge impact on being able to go out and replace a home, get in a new home faster than rebuilding, and not have that sticky problem of the land value. So I think that's the most significant, that in the 36 months of really significant legislation that's happened recently here in the state of California. Next slide, Rebecca. So let's talk about the insurance market today. And this is a big thing. So the wineries, we had more wineries burned down than I think in the history, especially in the history of California, probably in the history of any winery region, I think, in these last wildfires. And we represented a lot of them, and almost all of them are struggling to find new coverage. When they can, the rates are 200% higher than they were paying. A lot of them are being canceled, and not just wineries, but in red zoned areas. Insurance companies are saying they don't want to write coverage in certain zip codes or areas. So the insurance marketplace has been really tightening in these areas as a result of this. There is some legislation that insurance companies can't drop you for a certain amount of time after a wildfire. I think it's 2 years now. But the hardening of the market is here. It's people are dealing with it now with these red zoned areas. There is a solution that will probably always be there, and it's called California Fair Plan, Fair Access to Insurance Requirements, and it's done through the state of California specifically for fires, and then you get policies to cover you for other things. But if you have a fire, then you're insured with California Fair Plan. It's not the greatest coverage. It doesn't have some of the bells and whistles that other coverages have. It's got some lower limits sometimes, but it is there. It's generally available, and it is a solution for now. There's also some other carriers like Lloyd's of London, non-admitted carriers that will come in and still write coverage, but you're going to pay for it. It costs a lot more than an admitted carrier. They can charge whatever they want. They're not regulated by the California Department of Insurance, but they're options. These options like California Fair Plan and Lloyd's, hopefully and oftentimes are not permanent options. In some areas they become permanent options, but it will get better. More people will come into the market, more insurance carriers will come into the marketplace, they'll fill the void. It will get better, rates will stabilize. We've seen this after earthquakes, we've seen it after other fires. This is something that happens after a major event. Everybody sort of stops, but then it opens up, it expands, and it will again this time. So insurance will get better. It's hard right now. It's a tough market right now. But again, if history repeats itself, new people will come into the marketplace will open up again, rates will come back to more reasonable levels, and so we just have to be patient for that. The next slide, Rebecca. So we talked a little bit about climate change. We talked a little bit about what not to do should you be in the middle of one of these disasters. We talked about how to be prepared, better prepared in case a disaster comes into your neighborhood. We talked a new reality of California insurance coverage and how that looks right now, and hopefully that will get better. And now I'll open it up. If there are any other questions that I can answer, I'd be happy to do so.
Thank you, Steve. Wonderful job. We do have a question that has just come in. What level of documentation is necessary in a post-fire inventory, and how much time does this typically take?
Yeah, we talked about that a little bit, but just to touch on it again, different insurance companies are asking for different things, but generally and traditionally, the more detail that you can put in the inventory, so it's not just what the item is, but the better the description, because you can have one couch that's worth $1,000, another couch that's worth $10,000. So the more you describe things, the easier it is for the insurance company to understand the value. So you want to break things down into as much detail as you can as far as the items, and then you want to give the items detail or description. For example, where you purchase things can make a difference. You want to let the insurance company know if you purchase things from Nordstrom's and Neiman's all the time, as opposed to, Target and JCPenney. And if that's where you bought, that's fine too. But you want to give the insurance company an idea so that when they're going to cross-check your pricing, they have a better feeling for whether these prices seem reasonable and accurate. So you really want to break down into as much detail as you can of the items. Now, if you had 10 dress shirts that were of similar quality, yeah, you can put those 10 dress shirts together with a unit price. But if you have different kinds of clothes and different kinds of things, you don't want to just say clothes with a number. You want to break it down to, evening wear, suits, and that kind of thing. So You really want more detail than less. It's always better to have more detail than less. The dollars are in the details. And then you need to price everything. And when you're pricing things, you really want to be thinking about not what you paid for something, but what it'll cost you to replace. That might end up being including delivery or setup. It includes sales tax. So a big mistake people make is just, what did we pay for that? I think it was X. Well, X was a 5-year-old price at the Nordstrom half-yearly sale. It doesn't represent what it costs to replace it today. So there's a lot of detail. If you care about the claim and you treat it like the transaction that it is, the more detail, the better. And then from there, there's also a depreciation angle to it too, because oftentimes, most times, you only get the actual cash value or the used value of your personal property until you demonstrate that you're buying and spending the money. So it's important that you describe your contents in the condition that they are in, not just the age, but the condition, so that you can kind of limit that depreciation. The goal is to get as much money up front so that you don't have to go out and buy everything to get all of the money, and not, you don't want to be in a situation where you're leaving half your money on the table if you don't go and buy a bunch of stuff that you don't care about. So you want to close that gap so you get as much of cash money up front as you can and not feeling forced to go and buy things. So I hope that answered the question.
Thank you very much. Another question that we have is, does the change in policy regarding the deduction of land mean I'm able to rebuild out of state?
Yes, you can buy or rebuild out of state. What you'll be entitled to under the claim is what it would have cost you and what is the agreed amount that would have cost you theoretically. Because that first part of recovery, that getting the money versus spending the money, it's all theoretical. So it's the theoretical value that it would have taken for you to rebuild that home, the codes, everything else, and then an agreed theoretical number of what your rebuild is. And that is the basis for the payment. Whether it's in Texas instead of California, that doesn't matter, but they won't pay more than what they agreed they would have paid to rebuild your home on the property. You can rebuild another home somewhere else. You can buy an already built home somewhere else, but that's the basis for the payment. The great news is that you don't have to worry about arguing about what the land value is or taking the land value out of the equation on that purchase price or that rebuild price.
Great, thank you. Another question is, would you recommend making an emergency binder with passports, birth certificates, wills, etc.?
Yeah, I'd recommend you do sort of a dual role on that. So first of all, I'd scan all that stuff and put it in the cloud so you have an electronic copy, but it's also good to have that stuff almost like the go bag as part of the stuff that's in your go bag or ready to go, or if it's in your safe, that you just remember to grab that stuff on your way out. Don't rely that the safe will protect it. But it's great to have all that stuff in one place. It's easy to get to and easy to take with you. I still would have a version of it scanned so that if something goes wrong, you forget to take it or whatever, you have copies of these things.
Wonderful, and I think we have time for one more question, and it's kind of a broad question. What kind of coverage do I need to make sure I have?
Well, part of that depends on your home, your unique circumstances, and that's definitely a conversation to have with the Bender U people or your insurance agent or broker. But there are some things that are obvious. If you have an older home, some insurance policies do not cover you for the building ordinance or law, the code upgrade coverage. So if you had an old home that was built to certain standards, now when you go to build or rebuild the home, you have to upgrade certain things. Maybe it's sprinklers, maybe it goes from a 2x4 to a 2x6. There's a lot of different things that have changed in the code requirements from when your older home was built. Some policies don't cover that difference at all. And on older homes especially, that number can be significant. Some policies automatically give you, say, 10%. That might be part of the limit or addition to the limit. And that might not be enough if it's an older home. So if you have an older home especially, I would advise you to talk to your agent about, hey, how much code, building ordinance, or law coverage do I have? And let's talk about what's changed from when I built my home to when I built my other. Because otherwise, your base of payment is based, again, on what you had, not what you want. So what you had doesn't include the code unless you have an endorsement that buys that back in, and then you get to add it. So definitely, especially an older home, I would look for that. I would make sure that you have extended replacement cost, and the higher the percentage, the better. It's almost like another insurance policy on top of the insurance policy. You don't rely on it, but to have it is super important. And then again, I talked about additional living expense. Look and see whether you have actual loss sustained or whether there's a dollar limit. And if there's a way to increase that dollar limit or to get rid of it and have it be actual loss sustained, I would look at that coverage as well.
Fantastic. And we'll go ahead and wrap up the Q&A time right now. But thank you again to Steve and the folks at Greenspan for just sharing with us today their expertise. I really had a lot of takeaways, and I'm sure many of you did as well. We appreciate all of you for taking time out of your busy schedules to join us for today's Vendor U. Don't get burned, lessons from recent California wildfires. As a reminder, this session has been recorded, and a link to view and share the recording will be emailed to you following the webinar. Should you have any questions that arise after our webinar has concluded, please feel free to reach out and we'll be happy to help. Thank you again, and we hope you all have a wonderful day. Thanks, Steve.
Thank you. Have a great day.